Imagine a world you thought you knew, turned upside down. The signs are subtle at first, whispers in the financial world, a flicker on the global stock market screen, but then the whispers become a roar. The foundation of global finance, the bedrock upon which fortunes are built and nations trade, begins to crack. We're talking about the US dollar, the king of currencies, the world's reserve. What happens when the king is dethroned? This isn't just a story for Wall Street. It's a story for Main Street, for every street, in every corner of the globe. For decades, the dollar has been more than just money. It's been a symbol of stability, a safe haven in times of crisis. Nations hold it in their reserves, oil is priced in it, and international contracts are written in its name. Its dominance gives the United States a unique power, what some call an exorbitant privilege. It allows the U.S. to borrow cheaply and wield significant influence over the global economy. But what if that privilege vanished? Let's paint a picture. It starts with a loss of confidence. Perhaps it's driven by soaring national debt, political instability, or the rise of a powerful new economic bloc with its own currency. Major trading partners, one by one, start announcing they'll no longer price their goods in dollars. They switch to a different currency, or maybe a basket of currencies, or even a new digital alternative. The first domino falls. On the world's trading floors, a wave of panic selling begins. Traders, algorithms, and central banks all rush for the exits, dumping dollar-denominated assets. Treasury bonds, once considered the safest investment on Earth, are sold off at an alarming rate. Their value plummets. The screens glow red, a cascade of falling numbers that represent trillions of dollars in wealth, evaporating into thin air. The immediate effect back home is catastrophic. As the world sells off dollars, its value goes into a free fall. Suddenly, everything imported costs more. That phone in your pocket, the clothes you're wearing, the gas for your car, even the food on your table, the prices skyrocket overnight. Inflation isn't just a concern anymore. It's a raging fire burning through savings and paychecks. The cost of living becomes unbearable for millions. Interest rates would have to be hiked dramatically to try and stop the bleeding, to entice people to hold on to the devalued currency. But this is a double-edged sword. Mortgages become unaffordable. Business loans are impossible to get. The housing market, a cornerstone of the American dream, would collapse. Companies, unable to borrow or afford their operating costs, would lay off workers en masse. Unemployment would reach levels not seen since the Great Depression. Picture the cities. The once bustling financial districts are now ghost towns. The trading floors of New York and Chicago, once symphonies of frantic energy, fall silent. The iconic ticker tape stops scrolling. The Bull statue on Wall Street becomes a monument to a bygone era. Storefronts are boarded up, shopping malls are empty, and construction cranes stand motionless against the skyline, skeletons of abandoned projects. The silence is deafening, broken only by the wind whistling through deserted streets. Globally, the chaos is just as profound. The entire system of international trade would need to be rewired. Countries that held massive dollar reserves would see their national wealth decimated. A new, uncertain world order would emerge from the rubble. Without a single, trusted currency to anchor the system, international trade could become fragmented and unstable. It might revert to a more complicated, less efficient barter-like system between regional blocs. Supply chains, already fragile, would snap completely. Getting goods from one side of the world to the other would become a logistical nightmare. This isn't a prediction, it's a thought experiment, a cinematic exploration of a what-if scenario. But it's based on real economic principles. The global financial system is a delicate web of trust and interdependence. The US dollar has been the central thread holding that web together for nearly a century. While its decline might not be the overnight apocalypse we've depicted, a gradual erosion of its status could still lead to a profoundly different and more volatile world. The debate among economists is real. Some believe the dollar's position is unshakable, that there are no viable alternatives. Others see the cracks forming and warn that its dominance is not guaranteed forever. The rise of digital currencies, shifting geopolitical alliances, and growing mountains of debt are all factors that could reshape the financial landscape in ways we can't yet fully predict. What would rise from the ashes? A new dominant currency from another economic powerhouse? A basket of currencies managed by an international body? Or perhaps a decentralized digital currency free from the control of any single nation? The transition would be messy and the path uncertain. It would be a time of great challenge, but also potentially of great innovation as the world scrambles to build a new financial system. This isn't meant to be a prophecy of doom, but a stark reminder of how interconnected our world is and how fragile the systems we rely on can be. It challenges us to think about the future of money, power, and the global order. The story of the dollar is far from over, and its next chapter has yet to be written. Thank you for joining us on this journey into a world without the dollar. If you found this exploration thought-provoking, make sure to like this video, subscribe to the channel, and hit that notification bell. We'd love to hear your thoughts in the comments below. What do you think the future holds for the dollar? Until next time, stay curious.